Patanjali Foods has come up with the numbers, and after the numbers, we are seeing the pressure on the stock as well because the margins have declined on a YY basis. Let's understand more onto the growth outlook ahead, and we have the CEO of Patanjali Foods, Mr. Sanjeev Asthana, joining us live. Hi, a very good morning, Sanjeev. Firstly, would like to know what is the edible volume growth given that the price cuts that the company has taken, and all in all, what is the reduction realization we can expect going forward in Q4?
So in terms of edible oils, to begin with, our volumes have grown substantially. In fact, we did a record month of exceeding 150,000 tons. Our growth rates are almost closer to double of what the market is growing. So there is a very healthy expansion in the revenues that we're getting on the edible oil front. Overall basis, I'm expecting that this momentum will continue to maintain in Q4 and the next year as well.
Asthana, this is Cher also joining in the conversation. Let's talk about the rural demand. If you could tell us how have the trends been when it comes to the rural segment, the demand trends, and also which categories are you seeing more demand, and if you could quantify that for us.
So rural demand, as I mentioned, in a couple of interviews before, there was a dip in the rural demand. Thereafter, post the harvest, the high commodity prices, the wedding season overall, I think there was a good uptake, what we saw in the rural demand in this quarter. And I'm anticipating that, the back of, on the pretty much the similar sort of reasons, we should see the demand momentum continuing to go forward. But the growth rate is slightly tampered. It's growing pretty much at between 4 to 5%, and which is a good number on the rural demand side, because if we can maintain that momentum on a sustained basis, that is going to be pretty much a large part of our portfolio.
Okay, but Mr. Asthana, you have a good exposure to the winter products as well, like honey and Chyawanprash. How is the demand for these products?
Overall demand, all the winter products, we consistently do well. We had two big changes because Q2, we had a massive push on account of the wedding season and the Deepavali. So there is a big demand momentum. So part of that, sort of what third quarter should have accounted for, got booked in quarter two, but that is stabilizing. And I think Q4, we should have pretty much a normal business as we go forward. Where we're seeing a pretty healthy growth in the food business. The edible oil continues to grow pretty well. Oil palm, while it is not linked to seasonality, but it is at a run rate of between 5 to 10% year on year. So I'm expecting that this quarter four should be pretty much more normalized. Some exceptional items will see a growth, but in general, it should be a pretty normal quarter for us.
Mr. Asthana, notably, your EBITDA margin or your margins are definitely under pressure. If you look at the quarter gone by, it's coming at around 4.64% versus 7.96% a year ago. If you could tell us what is the sustainable level when you talk about margins going ahead? Also, have you penciled in any sort of a guidance where you see the margin going ahead?
Margin construct is between 3 to 4% that we expect to maintain. Certain quarters will be better, certain quarters may sort of falter a little, but broadly 3 to 4% in edible oil we should do. Likewise, in the foods business, the margin construct should be between 15 to 18% year on year. That we should be able to maintain. And, the profile in oil palm business that we have between 15 to 20% margin, that we should be able to maintain. So I think pretty much as we head into 23-24, we should be pretty much on course to run these numbers. And we should have a very consistent both the revenue side as well as the margin side.
Okay, but now that the wheat prices are at a 10-year high, any impact of this volatility on the margins that you are looking forward to?
So wheat prices very clearly, it's historical high that we are seeing. The government has recently released some quantities for open market sales scheme, so that should stabilize the prices. But broadly, I think the year ahead, what we're looking at is a pretty tight supply side on the wheat side. And I think once we see the harvest in April, May, which is the part of the harvest which happens in northern part of the country, I think then I'm expecting prices to stabilize further. And I think overall, we should see this will have some inflationary impact, but not dramatically.
Right, Mr. Asthana. Let's talk about the value-added products then. And if you could tell us exactly how much are they contributing to your margins, and also if you could tell us what sort of a mix should one expect when it comes to Patanjali Foods.
So we have done multiple the sort of plans are afoot right now. So I've repeatedly mentioned that on the biscuit side, we want to head towards a more premiumization, where we're looking at premium offerings to the current portfolio that we have, and you will soon see in this quarter itself. I think a couple of those launches, being done. Likewise, on the Nutrela portfolio that we have, we are pushing for further growth. We're expecting that millet-based products, certain variants in ready-to-cook, ready-to-eat categories that we're going to launch. So again, that is a work toward premiumization. On the nutraceutical side, we're looking at more of sports nutrition further variants. For example, different flavors, etc., with the market likes. So you will see a lot of work happening towards that, where the broader purpose is that as a company over the next 5 years, we should hit towards double digit of EBITDA on an overall basis, which is including the edible oils as well, and which should lead to better margin profiling. And foods business also, we continue to explore that how do we go towards value addition in our traditional products like Chyawanprash, like medicated juices, relaunching some of those, and building the business on that side.
Okay, Mr. Asthana, last question to you is that going ahead, just the next week, we have the budget coming up. What is the expectation around from budget, and especially regarding the FMCG sector? What is your view on that?
So broadly, I'm expecting, and in terms of wish list, very clearly that the government has to look at with more benign eyes on certain segments which cater to the very poor sort of part of the population, and in the D segment. So that is one expectation that we have, that the taxation should be more beneficial to them. Similarly, what we're expecting is that certain areas in which we continue to impose, the import duty, especially on heavily regular products like, the edible oils, etc., there we'll see certain kind of relief. And the last part is that I think in ease of doing the business of, while government has done massive efforts in terms of supporting it, but certain regulatory changes and others, which is going to help the industry, I think is what the broader expectation is. Otherwise, India's demand momentum, India's continued growth that we're witnessing is pretty helpful for the FMCG industry as such.
All right, we leave it there. Thank you so much, Mr. Asthana, for joining us on the show to give us a slice about how the quarter gone by for Patanjali Foods, where you see it headed, and also sharing your budget expectations with us.